While we wait for the market to bounce back, we are studying key things happening around a few of these projects. Obviously, with Hedera lately, the biggest thing has always been institutional grade adoption around core pieces, like, for example, DeFi. If you guys have been watching a lot of my XRP videos lately, then you know that I've been focused on institutional DeFi because if we're thinking about the biggest wave of capital entering this market, it's not going to be from retail, it's going to be from institutional players. And a lot of these projects like Hedera are starting to really build out a path for the institutional players to come over and ultimately adopt and utilize these networks for DeFi use cases, as well as other tokenization, grade use cases as well. Which, if you think about it, tokenization and also DeFi both kind of mix perfectly well. So that's going to be a very big initiative for a lot of these projects to really kind of focus on. And that's why Hedera has been focused on this, especially lately. Now, when it comes to the market, everyone wants to know, listen, is the market done? Are we going to just watch as HBAR falls back down below 10 cents and we're going into a bear market and everything's cooked, we're done, we're finished? No, I don't believe so. Listen, this is what the 1 month looks like. Obviously not the best view. It's still fairly bearish. We are still creating, lower highs. And currently on the 1 year, we still have a higher low here. But the question is that going to be maintained, or are we going to lose the recent lows? Now, this is what I'm currently looking at on the weekly. I wanted to extend the view here because on the lower time frame structures, yeah, we have broken down below core levels. But again, on the weekly, the main thing that I'm focused on here isn't so much the price action. It's more so things like RSI that are telling us that we're back down into key levels on this chart where HBAR was extremely oversold. Yes, we're not down to these levels going all the way back to like August. However, if we're going back to October, we are right around those levels from 2024. Now, looking at HBAR currently, we are dipping down below 17 cents. We're at 16 and almost like a half cents right now, a little bit below it. And we will most likely retest this lower trend line around like 14 and a half cents. I'm totally fine with that. The main thing that I am focused on here is maintaining some of these lows. The low initially would be about 13.9. We'll just round up to 14 cents. And then after that, we're talking about like 13 cents exact. I would love for these two levels of support to hold because number one, this is the March and April lows. This is when the market bottomed out behind the initial trade war that started back in January. And then we have, of course, June, which was the last major dip in the market prior to this one where, Bitcoin ran to a new high in May. Nothing else really followed it. And then all of a sudden we saw the altcoin market get wiped out and everyone was panicked there as well. So the main thing that I'm looking at here with HBAR is simply maintaining some of these recent lows. Creating a higher low structure on the weekly will be very bullish. And then we start to see the market wake back up in a big way. I know that it's very boring. It's frustrating as well because we're just waiting for something to happen in this market while Bitcoin just hovers around like 110K and it's been fighting a resistance for so long. The main focus here is just Bitcoin. I know that is horrible to hear because, again, we're focused on HBAR. Why should we have to focus on Bitcoin? Well, it's mainly because, and I've said it many times over, Bitcoin is in the driver's seat right now. But beyond that, let's talk about a few things happening around this space regarding Hedera. Let's start off with Archax because we know Archax has been working closely with Hedera for a very long time. And yes, they are tokenizing a lot of things with Hedera. Recently, they did announce a major expansion with Hedera. And now, we just got this yesterday, pleased to be working with Federated Hermes to offer their UCITS money market funds in tokenized form. Now, they did tag all of the networks that will be involved with this. And of course, yes, Hedera is one of them. If we're looking into this, we have down here the full announcement, obviously, which is, it's all of their money market funds, essentially. It's 2 UCITS money market funds in tokenized form. This represents Federated Hermes' first non-US digital asset initiative, reflecting the firm's continued commitment to the digital asset space. Now, these are the 2 ones that will be listed on the Archax platform. So it's the short-term Sterling Prime Fund and then also the short-term US Prime Fund. And this is going to allow professional investors to hold them through beneficial ownership tokens issued by Archax. These tokens represent investors' holdings in the underlying UCITS funds and are available on multiple blockchains, including, and of course, Hedera is one of the many here. And then we also have a little bit of a breakdown behind Federated Hermes, which is with over 5 decades of experience and $634.4 billion in money market assets under management. Federated Hermes has been actively engaging with leading innovators and financial institutions in the digital assets arena. In the US, the firm serves as a sub-advisor to a private tokenized fund. In addition, Federated Hermes recently participated in a collaborative initiative with BNY and Goldman Sachs, exploring the use of blockchain technology to record customer ownership of select money market funds. And then, of course, we do have a quote here, which is, delivering innovative cash management solutions has long been central to how we serve our clients. As one of the world's longest standing money market managers, we are excited to bring tokenized money market funds as an alternative to investors already holding assets on blockchains. This provides the potential to access the stability and yield characteristics typically associated with money market funds without needing to move assets off chain. Now, we also have a quote from Graham Rodford, who is the co-founder of Archax. He said, unlocking new demand for TradFi products through the use of blockchain and tokenization is a key strand of the Archax strategy around real-world assets. This partnership does just that, but also unlocks innovative new use cases for money market funds once tokenized, such as the ability to use them as collateral and transfer value between parties as a type of yield-bearing digital currency. Working with Federated Hermes is a clear demonstration of the effectiveness of combining Archax's regulated and institutional approach to digital assets with an established leading player from the traditional world. And yeah, this is extremely bullish. I'm very happy about this announcement as well, because it's showing more increased institutional grade focus around crypto. And even when we think about Federated Hermes, yes, they do have a massive asset under management value tied to them when it comes to money market funds, but they also have $830 billion as of December 31st of last year tied back to them. So this is a massive name, huge player. And outside of that, right, we also got a few big updates regarding Hedera when it comes to DeFi, because again, when we go back to these tokenized initiatives, the main thing that we're focused on here is what's the next step here? Well, the next step is really allowing DeFi initiatives to be tapped in around these tokenized funds, which means yield creation. And also, even when it comes back to the idea of tokenization, a lot of people think that, oh, well, that value is just going to live on chain. That's it. It's not going to do much. It's just going to be on chain. No, you're going to trade, buy, sell, all that kind of stuff against those values. So again, this is just unlocking a whole new market, if you will, around these digital networks. Now, also on top of that, we need something to be extremely liquid, which is why we have stablecoins. And USDC on Hedera just jumped by $7.8 million in one single day. We are at $172.1 million. This is up over 100% in the last month, up 93% in the last week. And if we're looking at a few of the initiatives around USDC, the reason why we are starting to see that stablecoin bounce on Hedera in a big way is because we're starting to see the market around it expand rapidly with, for an example, players like BitCub, which is the #1 licensed Bitcoin exchange in Thailand. And they might not be the biggest exchange out there, but hey, 76,000 plus followers. This is just expanding more of the reach around USDC on Hedera, which is also going to lead to more value moving over Hedera and increasing the supply of stablecoins on Hedera as well, making the network even more liquid. Now, talking about that, we do have over here that the stablecoin market, in terms of like the actual market cap, is up 84% in the last 7 days, 160, almost $5 million. TVL still down. It's going to be, especially with the market. I've talked about this. However, I'm mainly looking at these levels of TVL on Hedera, and I'm thinking, how can we get back to these levels? How can we get back to these levels and even move beyond those levels? What's going to be like the main thing that really drives that? And yeah, it's easy to say, oh, well, it's going to be institutional grade, adoption, right? I don't believe so, right? I don't think that it's just going to be institutional grade adoption. I think that it's going to be major initiatives that are also pushed from the Hedera team. And we just got one of the biggest ones. Hedera hinted on the 21st at something. They put this out. And then we got the big update, which was 250 million HBAR was sent to 0.0.800, which is a wallet ID on the Hedera network. And this equals happy staking. So we have at Hedera Foundation, we are committed to driving both institutional and retail adoption of Hedera to help grow the community. In line with this, we are thrilled to share that 250 million HBAR has been sent to the wallet address staking account. Users can access staking from both Hashpack and Kabila app. This commitment to the click this because it wasn't expanding it fully. This commitment to the intersection of institutions and retail is not done in isolation. With institutional interest in Hedera at all-time highs through the filed ETFs and beyond, it's time to bring this capital on chain. That's why over the past year, we have been laying the foundation for new institutional-grade DeFi protocols that are being built behind the scenes for Q1. So now we know that there's going to be a ton of new institutional-grade DeFi protocols launching in Q1 of 2026. Such foundations include Binance, Crypto.com, and Gate support for USDC, T1 bridges like Layer 0 Core, Canonical wrapped Ethereum via Stargate Finance, Hashport Networks HBAR Faucet, Chainlink CCIP, tokenized stocks with Swarm Markets, and Archax Exchanges pool tokens. As institutional interest in Hedera continues to grow, we look forward to flexing the institutional grade properties of the network to the broader Web3 ecosystem. To stay on top of ecosystem developments, join the Hedera community channel today. And yeah, this is a huge move. This is going to allow the entire ecosystem around Hedera to really grow in a big way. Staking is always a huge piece of the DeFi space. Even when it comes back to DeFi on Hedera, liquid staking is the number one player here around TVL from Stater at $75 million. Even if we're looking at the metrics in, the current view of things, so let's just go to overview real quick. Looking at some of the top players here, it's all based around staking. Aave, for example, is lending 37 billion. However, the next one here, Lido, is liquid staking at 33 plus billion. Then we also have restaking at 16 plus billion, liquid staking at 13, almost 14 billion. And even if we're looking at the actual categories here, which we could see by just TVL, obviously number one is going to be lending. We've always talked about that in the past as well, which, Hedera already has lending on it. Let me just real quick refresh this and make sure that's loading. There we go. So lending is always going to be like number one, but then liquid staking is very close. It's $6 billion less than lending at $72 plus billion. And we also have restaking here, which you could argue, just toss that into staking. And well, we're almost at $100 billion for staking alone. So again, if we're thinking about what's happening here, staking has always been a huge piece of DeFi. And I'm very happy that the Hedera Foundation is doing this. I also think that we are, really kind of starting to see a big push for things happening around DeFi on Hedera, which is also going to be unlocked in a big way. We already know that September was a huge month. We talked about it, but Hedera Foundation recently put out a great breakdown of everything that happened. Like, for example, the pool tokens from Archax Exchange, which, we constantly are seeing Archax expand around the tokenization space. But also on top of that, we did see another big push from Archax, which was with Aberdeen and also Lloyd's Banking Group, which was based around RWAs as collateral for FX through Archax, which was another big push around institutional finance. But then we also had Swarm Markets with, their DeFi compatible tokenized stocks launching on Hedera. Again, we're starting to see a mix of both worlds, TradFi and DeFi converging at rapid pace. And then also Stargate with their wrapped Ethereum. Definitely another huge thing, because again, if we're going back to the categories around DeFi, Canonical Bridge, number 6, $19 billion tied back to it. And then outside of that, we also had Hashport, network launch the Faucet. This is a huge one. It's never been easier to explore the Hedera DeFi ecosystem because this gives every user a small amount of HBAR to cover the initial fee so that they can explore DeFi on Hedera. And then, of course, yes, SaucerSwap Labs, the leading DEX on Hedera, they just crossed $4 billion. Their trading volume climbed 88% to 974 million, while TVL grew 67% to 99 million, and this was all in quarter three. Active users increased 23% quarter over quarter, reaching 9,859, and this is just the beginning. And then, of course, yes, NFTs started to break out in a big way on Hedera. I mean, Hedera has just been seeing increased growth. Everything is accelerating in this space. I love to see this. This is incredible. And of course, yes, Hedera is at the top of the list as one of the most bullish projects to look into, even with the market being in this downtrend that we are currently in. So again, main thing to focus on here is just looking at the fundamentals, seeing how these networks are expanding, how things are starting to blossom out on these networks as well, like around DeFi and the things that are really needed in order to get to that next phase of adoption. So I'm very happy about this. And with that being said, I hope that you guys enjoyed this video. If you guys did, definitely like, subscribe, turn notifications on because more free content. You guys are more than welcome to follow me on Twitter and join the free Discord in the description below. And with that being said, guys, thanks for watching. Peace out.